K Kim here with the Traders Club, twotradersclub.com. Thank you for tuning in. Welcome to the market update. Today is July 28, 2017, Friday. Hope you had a good week trading thus far. Well, the market did see some shakeout yesterday, but this is something that I've been tweeting out, that as long as we stay above this rising pivot, right? It's a rising pivot. We had a resistance here, resistance for a couple weeks, and then we was a little bit of, pause there before moved up higher. We're retesting that level. Well, as long as we stay above this level, benefit of the doubt goes to buyers. I can give you a quick example of why this level is important. This was back in, what was it? Back in May, where my cursor? This was back in May 31st. I think I remember vividly talking about this day. And I talked about how you can go back and check. And how, hey, as long as we hold this rising pivot, horizontal support area, well, benefit of the doubt goes to buyers. I don't know if we're gonna break below it or not, but hey, the trend is up, and everybody wants to say this is a bull trap. I say, well, that's not a trap. That's a cultivation. From this point on, it could either go higher or lower, of course, but do you want to call every higher high as a trap? Or do you want to call it a cultivation? Because the market moves up and down, up and down. That's what we're calling uptrend, development uptrend. And that's how the market cultivates higher highs. So you got the high, we got the higher high, and then you got the higher high, right? So, and we're holding this again, this was back in May 31st, holding this rising pivot and then a horizontal support. Say, hey, it looks like a little bit of bull flag, had a little bit of shakedown that day, and then you can see we saw continuation. And I'm not saying that because we're holding this level is 100% guaranteed that we're going to see a continuation to the upside. All I'm saying is benefit of the doubt goes to buyers in the micro term, meaning like next several days, as long as we hold this level. But let's say if we lose that level next week, right? We got 20 MA hold, we got 20 MA residing around 245, and also about 244.80-ish. We got horizontal pivot or resistance. This was a level where we had a prior resistance that acted as a support back in July 18. That's how we actually market bounced back in early July. We had a prior resistance here. Here we found support. Recently got up, came down. We found support again at that vicinity, which is coincident with the rising pivot and the 50 MA. We broken above the bull flag, and now we have gotten above the rising pivot. And that's kind of what happens. Market goes up and it finds a support, and a recent support, if we bounce, it continues higher, comes back down, goes up, comes back down, and in that cultivation, it develops an uptrend. Well, we're still in an uptrend. Trend is up. Minor term, trend is up. Intermediate term, trend is up. Primary term, trend is up. Major primary term, trend is up. We're up in all levels. Trying to call tops and trying to pick tops, it is the most dangerous endeavor. And most people who trying to call tops are losing money, and they're miserable. And it's very, very difficult market for anyone to think that they can make money trying to short these little dips. You know what I'm saying? It's better, isn't that? Better to buy the dip, go long, and then ride it up, right? And I've been saying this same thing for a long time here. So as of today, yeah, I mean, looks like we had a little bit of gap here. The market is closing here as I publish this video. 15 more minutes. That's why you got some flashing lights going on. So looks like if we do gap up on Monday, that potentially be some kind of or continue high to the upside, could be some kind of like minor term Morningstar reversal that could get us to maybe 249 or so. Let's say if we continue to see decline, we get to see a gap down or something like that. I'll highly anticipate at 245, 240-ish as a potentially a strong support level. Worst case scenario in the minor term would be this thing coming down, maybe retest gap, challenges the gap, or fill that gap, or retest that 50 MA. In this vicinity, probably going to act as pretty strong support as well. But as of today, I don't see that coming all the way down. I think we'll probably find strong support at 244 should the price continue to decline early next week. Otherwise, if we see some bounce early next week, Monday or Tuesday, it is likely it could continue. Just keep an eye on this rising pivot, because I think this rising pivot is going to be important for the next 2 to 3 months. This is what I think is going to happen. What I think is it's going to fizzle, come down, hit it again, go up, hit it again, and then we're going to start to see that. And then it gets to about 253, possibly 256, and then it's going to correct back down to that pivot, right, before going higher, right? So it's here, let me... So what I think is gonna happen, if I can forecast next 3 months, is that it goes up, comes down, hit it, maybe sideways for a little bit, goes up to 250, and then maybe some volatility, goes up to about 253, possibly 255, and then it gets a correction to back down to this rising pivot. And then at the time, that 50 MA is gonna follow it, and then hit it, and then gets back up. I think that rising pivot is going to be a pivotal, probably a key resistance, key rising. Oh, I moved a little bit here. Okay, the key level to watch for the intermediate term and minor term trend perspective. So let's see how it plays out next week, and we'll follow up. And I'll have this chart, this rising pivot on my chart here. So we'll follow up on next Friday. Let's look at the Russell 2000. Russell 2000 obviously did see a little bit of pullback here. Again, we are in this kind of a rising channel. When you're dealing with this rising channel, things could get hectic. Actually, falling channel, you're gonna see a bit, when the stock or the index is in that falling channel, and when it actually breaks out, you will see much of a kind of a parabolic, you will see kind of a good breakout move after some shenanigan. Well, when you're dealing with the rising channel, you're gonna tend to see a lot of head fakes, because this is because so many people are trying to ride this rally, right? People can see it. People can see that Russell 2000 has been in this 7-month range, and they know that once this thing breaks out, this thing will break out. So they're trying to go on that breakout, and so then market is going to continue to punish them and make their life difficult. So when you're dealing with chart that is kind of in this kind of messy look with all these moving and all these aligned, I'll make it a little bit more simple for you guys to understand. And so so sometimes just get rid of everything, and this is how you can able to analyze the stock market, or the sentiment of current Russell 2000's the behavior, the sentiment, the psychology behind it. So, or the strength of trend. So you can see here, let me tell you. So I want you to pay attention to here, like that. You see that? So I remember Russell 2000 broke out after the election. The 50 was, this is a 50. You see that pink dotted line moving average? That's a 50 exponential moving average, 50 EMA, right? And it pulled back and it found support 3 touches, and we saw kind of another leg higher move, right? And then things started to really shake and bake, right? This is where the price action was not really respecting that 50 MA, just moving all around it, right? You can also notice that in that vicinity, when the market was not respecting 50 MA, 50 MA started to move sideways. You see that 50 MA, it's moving sideways. We're not seeing any kind of trend really. 50 MA is really moving sideways. What that tells us is that intermediate term trend is neutral, right? Obviously, primary term trend, we're still in a primary term trend at that point. Minor term, it was just shenanigan, right? Intermediate term, what that 50 MA is telling us is that it is neutral. We're not trending. But something has changed right here in this segment. Can you see it? Somewhere right about here, 50 MA is trending again. Do you see that? Do you see that 50 MA got respected here? This is very, very important. Look, 50 MA didn't get respected here. You see that 50 MA we were holding above it. There were a lot of tension. There were a lot of tension, commotion in that vicinity. A lot of people were trying to buy the dip. I actually did add to my calls at that level when this thing pulled back. Anyway, when it pulled back, or in that vicinity, when it pulled back, when it gapped down, it just shook everybody out. Everybody was shocked. I'm like, oh my God. And the people just exiting, right? They're just getting out, right? And obviously after getting out, this thing reverses back on you, right? So we're back at that level here in mid-July. And people remember this. People remember what happened back in May, because either they got burned trying to go long, or they made money maybe shorting. So they remember this level. So there's another tension happened, but this time, instead of Russell 2000 pulling back to, possibly coming back down to the lower level of channel, it got respected, and ever since then, it has been moving higher, right? And we're retesting this kind of band of support right now. Do you see that? So can you see we are actually trending in the intermediate term, and we weren't trending in February to about June. We're sideways move. So can you see that? So that 50 MA is going to be a key moving average as it continues to move higher. I believe that the Russell 2000 will continue to make its progress to the upside, but it's gonna see a lot of up and down move like this, because we're still in this kind of a rising channel type of move there. But benefit of the Dow goes the buyers on the Russell 2000. I believe that the market, Russell 2000, is in that kind of early stage of breakout, and I believe that Russell 2000 will see much higher prices towards the end of the year. I think it's possible to get to 160s before the year ends, maybe 155, 150 for sure. So that's kind of what I'm seeing there. Let's look at Qs. This is a prior resistance, new support, 20 MA holding. We cultivated higher high. We're no longer in this kind of a downtrend phase in the minor terms. So benefit of that goes to buyers. 20 MA is rising, 50 MA rising, 100 MA rising. Trend is still up. I mean, you think because it went up so much, so many people thought, well, we did this much move, so we should come back down to 120. The market doesn't work that way. Anybody tells you that just because the market has gone up so much, it should come down more, they really don't know what they're talking about. They just scared to go long so that they wish the market will come down, so they'll feel better for them about themselves not going long and maybe trying to short it, and then they're hoping to see that kind of move. But market can stay so long where when most people think that like it cannot possibly go any higher, and it does go higher and higher. Isn't that interesting? Let's look at banks. Banks holding up well here. We did see a big gap up several days ago, but then what happened was, we gapped above that prior resistance. That was actually constructive gap up. You actually want to see a gap when it does gap up. You want to see gap stays above the prior resistance rather than just below it. But it failed, came down. People started to, short-term traders and day traders start to short it. Or closing their long positions. But looking at a more of a big picture perspective, it has been in this kind of stair-stepping pattern. 20 MA is holding today. We got rising uptrend support, as you can see, holding today. So if we do lose it, it's not end of the world. I think next support is 24.58. 50 MA is residing at 24.34, but I think this level, 24.46-ish, if we do come down lower, should provide as a kind of a strong support there. So really, trend is up. I really, at this point, for any longer term traders, nothing to worry about. Looking good there. Let's actually go to Intel. Intel actually did see pretty solid earnings beat. Same thing happened back in last quarter. They actually also had a good solid numbers. It's just it hasn't seen a good break from the investors. It's just everybody wants to go to AMD, everybody wants to NVIDIA, but it's interesting why they would go there. It's look at a month. This is a monthly chart. Is this where you want to buy? Tell me, is that the level you want to start accumulating? I guess if you're a day trader, if you're looking at things more of a short-term perspective, I guess you could. And Do you really want to accumulate? Do you want to have your core positions here? Or would you rather go long here and ride it up, right? Here, I'll give you a different perspective. Intel. Do you want to go long here? Or would you rather go long either here or here or here or here, right? This is Intel monthly chart. This is in the 17-year base. Do you rather go long here or do you rather go long there? I'm not saying NVIDIA is gonna come straight down. I'm not saying that. I don't. There's this guy that I follow. I'm not gonna name names. This person, this trader, is, I guess, is a fund manager or money manager, and he said that he continues to have a core positions on NVIDIA for his clients. I don't. Do you really want to have your core positions NVIDIA up here? I think what happened? Bill Ackman, right? I think Bill Ackman had his core positions on Valiant, I think somewhere here, right? I think he started buying here and they started adding it here or something like that. He had his core positions there. Is this the level do you want to have your core positions at, right? Or would you rather have it maybe somewhere here? Maybe here? Or do you want to be up here? Do you want to have your core positions up here? Really? It's like, why? It's like, why do you want to chase this? I don't understand. It's like everybody wants to everybody wants to be quick rich. And we all know that scheme don't work. Sooner or later, you're gonna get burned. I'm not saying NVIDIA is gonna come down. I just don't understand after this kind of move. I mean, that's your thing. Do it. I guess that's your thing. I'd rather go long here and ride it up there, right? I'd rather go long, right? Maybe here, or here. Not here, or here, or any of these levels for that matter, right? So I like Intel long term still. I like it here, but going back to daily chart, obviously this was an important level. I've been accumulating positions in that vicinity. This thing plunged, and I tweeted out I'm holding full. I talked about it. Okay, so this was a tweet that I tweeted out back in 21st of June. This is a chart there. Basically, in this chart, what I talked about, this kind of, how it tends to, even if I draw this line right here, right there, you see that it broke that support before moves higher. It broke that support before moves higher. We recently broke that support on that day on June 21st. You gotta understand that the market, it knows how to test your patience, right? So let's get out here. So that was June 21st, is right there on this day when it gapped down. So you can see this is where we found support. We gotten slightly below it, undercut it, kind of traps everybody out. That's a massive bull trap there. Traps everybody out, and then it reversed. I held through the earnings, which I tweeted it out. And this was important level, pivotal level, because that has been a strong support. We held that level for a long time. So this was a level that everybody was looking at. So when this thing gapped down, man, everybody started panicking, everybody exiting. I held my positions all the way through. And then now we're holding above it. That's a good sign. We want to see it holds above 3502. We have some downtrend resistance that we need to, you got this level there, so that's kind of, we're seeing some tails. And then we got 200 SMA, 100 SMA residing in that vicinity. So still not out of the woods yet. We're slowly kind of climbing back up here. See a lot of accumulation on that buying volume. If it gets about 36.51, I think that will be a kind of a breakout level before going higher. But kind of, we're dealing with kind of this long, this 17-year base here, which I've been talking about. I really like this pattern, long-term perspective. I do think that in maybe a few years we'll get to all-time high. It's not gonna make it easy. It's not gonna make everybody. Market is not gonna make it easy. It's gonna flush everybody out. Everybody's gonna get mad about Intel. It's like, why isn't Intel moving? Everything else is moving. The Nvidia is moving. AMD is moving. Why isn't Intel moving? So they start to rotate their money, start to get out of Intel and put it somewhere else. What's gonna happen is once you start chasing those high flyers, you are gonna get burned. Trading is not about it's not like street racing. We're like, oh yes, yeah, baby. That's not how you're supposed to trade. Obviously, if you're a long, short-term trader, I guess that's your thing. But to able to trade this market more a stable, healthy, emotional way is you understand the big picture, understand the market is going to give you shake and bake. It would also even give you flops and head fakes and all that stuff. So you got to give enough leniency. And I think my followers who you've been following long enough and my members understand that, that's how the market works. Market knows how to take you out. Market knows how to take your money. And it is designed that way. Market is not designed to make your life great and make your life easy. Market is designed to crush retail traders because market always need new fresh supply, right? It needs new fresh supply, and it needs to crush retail traders for the big boys, the big investors, the mutual funds and central bankers and all these big guys, so they can keep buying stocks, right? So that's how the market moves. And if you understand the big picture, it will be more easier to navigate when markets shake and bake. It is a given. Market is going to shake and bake. But so I think I like Intel here. But let's see. It needs to prove itself more. I think if we can get back about 36.51, I think finally then this thing is ready to break out. So we'll see how it plays out. If I see any kind of advancement, I'll maybe write a post or something about something like that. But let's look at Apple real quick. And then let's see. Apple, we got a little bit of downtrend resistance here. Earnings coming up. What is it? Tuesday after hours. If this thing gaps up, continues higher, I won't be chasing it. But if we do see a pullback, possibly to 130 to 134, I may be thinking about buying it in that vicinity. So let's see how it plays out here. We're just a little bit of a, potentially be maybe stuck in this range. But see how it plays out after the earnings. I think that's going to be the pivotal key price action that you want to pay attention to. And then after that, we can have maybe a more lucid idea where Apple is going. Let's quickly Tesla. A similar pattern here. August 2nd earnings after hours. Again, if it continues higher, but I think if it does pull back, I think these level provide a strong support. 178, 278, 270-ish. One last look, and then I'll let you guys go. Gold. What I like about gold is this. This is a monthly chart of gold. This background is what I call the water. We're holding above the water, and this is a falling resistance here. This is long-term downtrend resistance, right? It is working very, very hard to break above it. What I don't want to do is that, let's say next month we get it slightly above it, and then you start going long right there, thinking that that's a breakout. How many times you do something like that got burned, right? That's not what I would recommend. What I want to see, this is gold daily chart. You can see this again. You faked everybody out, gotten below it, and then it's going to. How is it that it seems like the market does that all the time? This is what kills traders. Their spirits gets crushed when something like that happen, right? It gets below it, let's say they closed out their long calls or longs and they couldn't handle it, and then it reverses on you, and then they start chasing it, and then it goes back up. How many times you've been in that situation, right? That's why you don't want to micromanage these stocks. You want to give them enough room, let them wiggle around, give some leniency on your stop. And again, if you're a day trader, swing trader, it doesn't apply to you. But again, I think my followers, my members understand that for position traders and active investors for like ourselves, give them enough wiggle room, enough leniency. So what I'm looking at for gold is that it goes up and breaking above this major resistance level and breaking above this falling downtrend resistance. This is from way up top, right? This is a major downtrend resistance. I want to see this thing breaking above it, not just breaking above it, but I want this to come down, retest it, and then possibly go long in that vicinity. Or if you want to be more safe, possibly go up, come down, and then if it bounces, creates higher high, then that might be the better level to go long, because because once gold get into a trend, it will last you for several years. You see that, and you can keep riding it to the upside. But see, when you look at this a big picture, this is much easier to navigate. But if you look at this on a daily basis, like, oh, I'm gonna go long here. Oh, it's pulling. I'm gonna close it out. Oh, I don't know. I'm gonna long here. Oh, I got stopped out. Oh, it's just it's very difficult to manage, especially chart because it gets a lot of gap ups and gap downs. Only way to really truly able to profit from a stock like this, like gold shares, is to position trade. Is that you would let's say get up, come down, maybe buy this dip, and you ride it for about 6 months and close some position. When it pulls back, add some more in that regard. I think market, as I was doing this market close, I'll do one last look on Spider and I'll let you guys go. Looks like we're holding it. We pretty much filled this gap that opened from this morning. So if we do see a bounce, maybe a gap up, that will be a Morningstar reversal. Otherwise, if you continue lower, then 244.82 to watch. Have a wonderful weekend. Good luck trading next week.